Category Newsflash Target Length 10 Subacks 10 Lookback Words Cipher Minutes on Monday, June 22nd. The Nikkei Arbak Arsawuv closed at Nunwan Nisan Subak Wushersandan. That number matters for one reason in Tianjubak Hashiju at the absolute peak of Japan's asset bubble, the most extreme stock market overvaluation in modern history. The Nikkei reached Sanwan Hash Tianjubak Wushersandan. Then it collapsed. It lost Hashijur% over the next 19 years.
7,353 is more than double that. Japan's stock market has not just recovered from one of the greatest financial disasters of the 20th century, it has surpassed that level, and then lapped it.
It was the 7th consecutive session ending at a record high. Japan's market is up %, over the past 12 months. For context, that is roughly the performance of the S&P Kung during the entire decade of the 1990s.
Then, 2 days later, the Nikkei fell 6% in 2 sessions. By June 24th, it was at Leak 1 Ju Fenpak Sich Wuden 3,000 points, gone.
So which story is true, the historic bull market or the fragile one? To understand what is happening, you need to separate the rally into 2 layers.
The first layer is structural, and it is real. Starting in Nian Arsan, the Tokyo Stock Exchange issued an ultimatum to Japanese companies: clean up your balance sheets or face consequences. Specifically, companies trading below book value, meaning the market thought they were worth less than the sum of their assets, were told to improve their return on equity or explain why not. This is the kind of thing that gets dismissed as bureaucratic noise in most countries. In Japan, it worked.
By early Nisan Arsaluk, more than 80% of companies listed on the TSE's prime market had disclosed plans to improve their cost of capital. In Nisan Ars alone, Japanese companies bought back more than *1 trillion yen, roughly *1 trillion itsumaiter. That is a record. Dividends jumped *1 trillion itsumaiter.
For decades, Japanese companies were famous for hoarding cash, sitting on reserves so large they could have paid off their debts multiple times over while returning almost nothing to shareholders. That era is ending. The corporate Japan that foreign investors avoided for 30 years is starting to look more like the kind of business they will pay a premium for.
Wage growth is adding to the picture. Japan's spring wage negotiations, known as shunto, produced the strongest pay increases since the 1990s for the 2nd consecutive year. When workers earn more, they spend more. When they spend more, companies earn more. This is basic economics, but it is something Japan has not experienced in a meaningful way since the bubble era.
The second layer of the rally is where things get complicated. Japan's semiconductor and AA supply chain stocks have become the dominant force in the Nikkei's gains. Tokyo Electron, the country's largest manufacturer of chip-making equipment, has surged. Advantest, which tests semiconductors before they leave the factory, holds roughly half the global market in logic chip testing equipment and counts Nvidia as a core customer. On some record-setting days this year, those 2 companies alone accounted for 2/3 of the Nikkei's total gain.
That is not diversified strength. That is concentration. And then, last week, the Japanese government poured fuel on it. Prime Minister Sanae Takaichi's administration announced a $10 trillion yen investment plan, approximately $4 billion, targeting physical AI technologies across Ju-7 strategic sectors: semiconductors, robotics, drones, AI-enabled logistics, defense, quantum computing. The announcement was framed as one layer of a broader Sanbret Sedish trillion yen, Niten Sandollar trillion, commitment to public and private investment by Nisen Yonshtains.
As we explored last month, Japan's physical AI bet is not arbitrary. Japan faces the loss of roughly 25 million working-age people over the next 2 decades. A country that cannot automate its way through that demographic shift faces a structural decline in productive capacity. Physical AI robots on factory floors, automation in warehouses, AI-assisted surgery in hospitals is how Japan intends to grow its economy with fewer people.
The $1 billion announcement is what pushed the Nikkei through 901 yen on June 22nd. Here is the critical question: is this different from Senju Haju?
At the Chenjo by Basjo peak, Japan's Nikkei traded at a price-to-earnings ratio of roughly 6 times. That means investors were paying 6 yen for every 1 yen of actual profit. The current PE ratio on the Nikkei sits between 6 nun and 25 times depending on how you measure it. That is not cheap, but it is not delusion.
In Chenjo by Farsaju, the stock market was pricing in a Japan that would dominate the global economy forever. Land in Tokyo was worth more than all the real estate in California. The entire market was a bet on a fantasy that never arrived.
Today's Nikkei is pricing in something more specific: that Japan's semiconductor supply chain sits at the center of the global AI build-out, and that corporate governance reforms have permanently improved the quality of the underlying businesses. Both of those things are plausibly true.
But the pullback on June 24th reveals something important. When U.S. technology stocks fell on concerns that hyperscalers, Microsoft, Google, Amazon, might be approaching the upper limit of what they can spend on AI infrastructure, Japan's semiconductor stocks dropped immediately. Fujikura fell 9%, Tokyo Electron lost 9%, Disco Corporation, which makes precision cutting equipment for chip wafers, slipped 9%, all in one session.
Japan's AI rally is tethered to Silicon Valley's mood swings. That is a structural vulnerability. The manufacturing data tells a more complicated story. Japan's Manufacturing Purchasing Managers Index came in at Go Osi Tenkyu in June, the 6th consecutive month of expansion, with new orders growing at the fastest pace in more than 4 years. Employment in manufacturing grew at the steepest pace in 8 years. Those are real numbers from real factories.
But Reuters noted something worth watching: a portion of that order surge is not genuine end demand. Companies are stockpiling inputs, semiconductors, raw materials, packaging film, because the conflict in the Middle East has disrupted supply chains and raised costs. That stockpiling inflates PMI readings. When the stockpiling stops, the orders slow down.
What you are left with is a market that has legitimate structural foundations: governance reform, wage growth, AA supply chain positioning, sitting on top of a rally that has become dangerously dependent on a single global theme, the AA capital expenditure cycle.
If that cycle continues, if hyperscalers keep spending at current rates, if the physical AA investment actually materializes, if the yen stays weak enough to boost exporters, then Nanaman ni e looks like a waypoint, not a ceiling. If that cycle plateaus, if capital expenditure announcements start to slow, if the yen strengthens sharply when the BOJ raises rates again, if the Middle East supply disruptions start to bite, then the Sandate Looks Sent pullback of this week was not a healthy correction, it was a warning.
Here is the number that puts everything in perspective. On December 29th, Chenjubek Hazard Chu, the Nikkei peaked at Senba Senjubek Wu Sitindend. It would take Japan Sender Son years and San months to return to that level. The lost decades were not lost, they were the price of a market that had priced in a future that never arrived.
The current Nikkei, even after this week's pullback, is at Luke 1 Jusan Bak Sesavukuiden, that is 90% above the bubble peak. Not double, but almost.
The difference between Chenjo by Bashiju and today is this: in Chenjo by Bashiju, the market was pricing a story. Today it is pricing results. Corporate reforms are actually happening, wages are actually rising, physical A investment is actually being funded. The factories are actually expanding.
The question for the next 12 months is whether Japan can write enough of that story in the real economy to justify what the market has already decided is true.
The Nikkei spent 3 decades trying to get back to where it started. It would rather not spend another 3 trying to get back to Nana word count, Senzi and 3 ace. Estimated duration, minutes format news flash.